What if I told you there's a quiet Singapore company that has survived every recession, grown its profits for years, pays a steady 5% dividend, and still sits at only 8 times earnings? Yup. While everyone chases hot tech stocks, this boring little electrical distributor has quietly built a 10-branch network, accumulated 12 rental properties, and now holds nearly $35 million in cash with almost zero debt. So why is nobody talking about it? And why is Choo Chiang Holdings, stock code 42E, still trading like a forgotten gem on the SGX? In this video, we're going deep into the fundamentals, the multi-year financial trend, the dividend sustainability, and whether this cash-rich business is actually one of Singapore's most undervalued dividend stocks. To understand Choo Chiang today, we need to go back more than 30 years. Choo Chiang didn't begin as a large distributor with 10 branches. It started the same way many Singapore family businesses did, small, humble, and built from pure grit. Back in the early days, Singapore's electrical hardware scene was dominated by tiny mom-and-pop shops. Margins were thin, supply was inconsistent, and many contractors struggled to find reliable sources for essential electrical parts. That's where Choo Chiang came in. They began as a single-store operation, focused entirely on one thing: providing dependable, affordable electrical products to contractors with fast delivery and consistent stock. Contractors loved it. Electricians loved it. Word spread quickly. As Singapore industrialized through the 1990s and 2000s, from new HDB towns to expanding industrial parks, Choo Chiang followed the growth. They opened branch after branch in key industrial areas: Woodlands, Ubi, Ang Mo Kio, Pioneer, Tampines. And here's the smart part: they didn't just sell other people's brands. Over time, they developed their own proprietary product lines, CCM and CRM, improving margins and giving them control over quality. By the time they listed on the SGX Catalyst board in 2015, Choo Chiang had already transformed from a small family shop into one of Singapore's leading electrical distributors with a reputation built on reliability, trust, and decades of relationships with contractors. Today, that same foundation remains the engine of the company: steady, boring, reliable, and quietly profitable. Now let's break down Choo Chiang's financial performance over the past 6 years. And this is where the company's consistency really stands out. From 2019 to 2024, revenue has remained extremely stable. The company brought in about $89.6 million in 2024, almost identical to the year before. Even during COVID in 2020 and 2021, when construction sites were closed and contractors were struggling, Choo Chiang still held its ground. Revenue dipped slightly but never collapsed. On the profitability side, 2024 net profit came in at $3.85 million. This is lower than the post-COVID recovery in 2022 when profits spiked to above $9 million. But it's still a respectable number considering higher labor and material costs across the industry. What's more important is margin stability. Operating margins have stayed around 21%, which is solid for a distributor. Net margins range between 3 to 10% depending on property fair value gains during the year. Choo Chiang is a cash machine. In 2024, operating cash flow was $6.3 million, and free cash flow was $5.4 million, meaning this business consistently converts profits into real cash. This is crucial because strong cash generation supports dividends, expansion, and asset purchases. The balance sheet is rock solid. Cash stood at $7.36 million in 2024, while debt to equity is only about 13%. This is one of the lowest geared companies on the Catalyst board. In short, there is no financial risk here. The business can survive downturns comfortably. EPS for 2024 was 2.53 cents, and the company paid out 1.4 cents in dividends. Historically, Choo Chiang has been extremely shareholder-friendly, maintaining annual dividends even during tougher years. Return on equity came in at 10.6% in 2024, and ROA was about 12.1%. These are healthy numbers that show the business continues to generate good returns on every dollar of assets and equity. Net asset value per share stayed around 18 to 20 cents across the years, supported by their portfolio of investment properties and accumulated earnings. So overall, when you look at this 6-year snapshot, Choo Chiang is an extremely consistent, cash-generating, low-debt business. It doesn't grow dramatically, but it doesn't collapse either. It's a stable, reliable dividend-style stock backed by real assets and a strong balance sheet. Let's take a look at Choo Chiang's valuation and financial performance over the last 7 years, and you'll start to understand why this company looks attractively priced today. First, the market cap has grown slowly from about $50 million in 2019 to around $55 million in 2024, with FI 2025 projected at $62 million. Enterprise value follows a similar steady trend. This shows a stable, non-speculative stock with no big volatility, which is exactly what you'd expect from a dividend-style business. Price to book has consistently stayed around 2.7 to 2.9 times, which is typical for asset-backed companies with property holdings. But the more interesting number is the P/E ratio. Choo Chiang traded at 18 times earnings in 2019 and has compressed all the way down to around 7 to 7.5 times earnings today. That means the stock is now significantly cheaper than before, despite maintaining steady profitability. Return on invested capital peaked between 17 to 22% during 2021 and 2023, supported by fair value gains from investment properties. Even in the latest year, ROIC is still around 10 to 11%, which is healthy for a distributor. Operating margins were unusually high in 2020 to 2022 because of property revaluation gains, but normalized margins today sit around 18%, still respectable and stable. EV to EBITDA has steadily improved, dropping from 6.5 times in 2019 to below 5 times in 2024. EV to sales also trended down from 2.3 times to 1.8 times. This means a business is getting cheaper on both cash flow and revenue multiples, a rare combination. Net asset value per share has slowly climbed from 17 cents in 2019 to around 19 cents today, supported by retained earnings and investment property values. This creates a stable floor for the share price. Operationally, revenue has grown steadily from $16 million in 2019 to around $19 million today. Net profit fluctuated due to property revaluation, but remains consistently positive. Dividends have also been paid every year, ranging between 1.5 to 2.4 cents per share, another sign of reliable cash-generating business. Overall, this table shows a company that is stable, predictable, asset-backed, cash-rich, and trading at one of its cheapest valuations in years. For long-term dividend investors, these are the exact traits you want to see. Here's a quick snapshot of Choo Chiang's opportunities and risks. On the upside, the company benefits from steady recurring demand, strong cash reserves, low debt, and growing rental income from its investment properties. Its proprietary CCM and CRM product lines also offer margin expansion and long-term differentiation. On the risk side, growth remains limited because the business relies heavily on Singapore's construction sector. Rising operating costs could pressure margins. Property revaluation gains can fluctuate year to year, and competition from online distributors is gradually increasing. Overall, it's a stable business with manageable headwinds. So here's my final verdict on Choo Chiang Holdings. This is not a high-growth rocket ship, but it is a stable, asset-backed, cash-generating dividend stock that has proven its resilience through every economic cycle. With low debt, steady free cash flow, and one of the most reliable customer bases in Singapore, Choo Chiang continues to shine as a quiet compounder, the type of stock long-term investors often overlook but shouldn't. If you're looking for stability, consistency, and dependable dividends, this is a company worth keeping on your radar. Do you think Choo Chiang is an undervalued gem? Or is it too boring for your portfolio? Let me know your thoughts in the comments. I reply to everyone. If you found this breakdown useful, make sure to smash the like button, subscribe to Durian Finance, and turn on notifications so you won't miss the next deep dive. Your support really helps the channel grow, and I appreciate every one of you.